everyone, Brandon Wendell here with the Wendell Effect. This will be an abbreviated version because we're going to be going live tomorrow, and I hope you enjoy and join me. It'll be 3 p.m. Eastern on Tuesday, December 20th. We'll be doing a live The Wendell Effect, so make sure to be subscribed and just get ready for it. We're going to be doing it live with answering questions about the markets or about analysis, anything, and we'll be going through the markets and take a look at a bunch of different things as well. Before we get started, just a reminder, we're not broker dealers or investment advisors. Taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities. There is risk involved in the markets. No matter what we do, we can't eliminate the risk. We can only try to manage it. And we're not subject to trading restrictions because we're not licensed. So we can have a position of security and initiate one at any time. And if you want to stay in touch with us, you can send emails to me. You can catch me at brandonwendell.cmt@gmail.com. That way you can go ahead and ask me stuff that you might want to see in the live session tomorrow or even future sessions as well. Hit me up at TraderBDub on Twitter, and you can also search for the Wendell Effect on YouTube. So we're going to go ahead and jump in and just do kind of a quick update as to what the markets are doing. I'm just going to go with the equity markets for right now for this video and give you kind of a heads up of what to expect for this week. Okay, this will be kind of interesting. Lucy just joined me. I don't know if you guys can see her. There you go. There's Lucy, the not so wonder dog. Yeah, you. I'm talking about you. Okay. She was whining, wanted to be in my lap. Anyway, we're looking here at the ES on the chart, and on the daily chart, yes, we did make a higher high, but a key thing that happened here is that we made the higher high without making a higher high on the indicator. This is a momentum indicator, RSI, and we didn't get into bullish territory, which means we didn't go into 60. So very bearish. And today you can see we've already started off this week with going below 40, which is a bearish sign, meaning we should be able to make new lows. The big question really to me is going to be, are we going to break these lows in 2022 or are we going to do it in 2023? But those lows I do believe will be broken. Heck, let's go to a weekly chart here and take a look at the big picture. We're in a nice downtrend. We just came to the upper side of the downtrend and we're heading down again. So I believe we will continue with this pattern and make those fresh lows. Like I said, it's just a matter of whether it be 2022 or 2023 when those lows are made. Dropping down to the 4-hour time frame for this week to get an idea of what we might be able to take action on. Well, we're already starting to slide. We had a little bit of sideways motion and are dropping down today, continuing to make some new lows. We, in my E-mini think tank class, we actually were able to trade a little bit of this, expecting it to drop. I don't believe we've got anything to hold us up until this demand at 37.97. You look back, and where is it? There it is. You got that drop-based rally. That's the next target. It's interesting because on the Russell, which we'll see in just a little bit, we've actually broken that demand zone. Oops, sorry, I didn't mean to check that. I was trying to change something. But we'll see what happens. Overall, I think that you've just slowed down a little bit in the deceleration, or the move to the downside. We decelerated, but we're getting ready to pick up again and try to fight for those new lows. Again, I don't see a meaningful bounce until we get under that 3,800 level. So even if we drop down to a 60-minute time frame here, you can see, again, we had a little retracement after the big sell-off on Friday, and we are ready to resume. So it apparently, let me go back again to the 4-hour chart. I don't see anything really to stall us out, honestly, until we hit that demand zone I already mentioned. And let's see if we look at the fibs. Yeah, that would be basically duplicating our previous impulse anyway. So right in line there. If we do get pauses along the way, you can see where they might be. Go down to the 60-minute time frame. And there's nothing else there. If we can rally back up to the previous highs, that would actually be a nice new entry for a short. But unfortunately, I don't even know if we've got enough bullish momentum to get back up to retest that area of current supply. But if we do, we tried to do a little bit this morning, but again, it's continuing to show a lot of bearishness. So expect more down days than up days for this week. So let's move on. Now I'm going to take a look at the comparison of all these equities together, and we'll go to a daily. Actually, we can probably go to weekly for this one as well. Remember, from the lows, let me clean up my annotations here. I've got a percent change chart, and really measuring from the lows back on the 14th of October, you can see that we were being led to the upside by the Dow, and the Nasdaq was one of the weaker indexes along with the Russell. And now as we're starting to turn to the downside, and really the reason why that happened is the Dow kind of gave up. It was our leader pulling everything higher. Now we're being led by the Russell and the Nasdaq to the downside. So going to the Nasdaq here, let's bring it up on the same chart here. Just change over to NQ. There we are. And now Again, starting off on the big picture, weekly, and working our way down. Again, we're just doing this nice downtrend, no bullish pressure whatsoever. We go down to the daily time frame. We try to make the higher high, and again, we could not get above 60, so very, very bearish in that market, likely to continue to move to the downside. If we project, I don't know if I'd use that, to be honest with you, because we have a bigger impulse now than we had before. So we can drop to the, let's see, we're on the daily, we'll go to the 4-hour time frame to measure. And on the 4-hour time frame, I believe we still have the same demand zone going back. There it is, right here. So the downside target for the NASDAQ right now is just under 11,000, 10,995.50. As you can see, we're not there yet, but working our way down. So we can look for more shorting opportunities because, again, we got lots of bearish pressure. We had a little divergence where prices did move down right here, and they moved down on less momentum. And typically when that happens, you get a little bit of a retracement. Well, we did. We got our little retracement. Now we're pushing down yet again. And once more, I think we've already duplicated this impulse. We had this drop, retracement. Yep, almost 100% duplication right now. So going down to the 60-minute time frame, pretty much the same picture. This is a weaker market than the S&P, so it's a better shorting opportunity. The problem is we may not get up to short. You know, we might get a little bounce here at about 12,000 or just under 12,000. Remember, ultimately we're going under 11,000 before we get a meaningful bounce. But there may be some shorting opportunities if we can rally up just slightly. I don't know if we're going to make it up to this supply. So the other alternative would be if we have, and this is on a 60-minute time frame, a retracement. We don't know if this is going to be the low as of yet. So wherever that low ends up, that's where you would put the end of the Fibonacci retracement. So as of right now, what I've got for Fib retracement values, you could possibly expect a pullback to one of those values. And again, you got to wait until we actually start pulling back to measure because we don't know where the low is going to be as of yet, but we are extremely bearish. As we start to pull back, you may have an entry at one of these levels, 11,248, 11,279. What you would do is short when you see proof that price is reversing in that area. So look for some topping tails or lower highs and lower lows, maybe even down on the 10-minute time frame while you're in that area to let you know prices are reversing. Or if you close just above the fib level, then close back below, that's your trigger to go short. And you can put your stop at the next fib level. So you just got to be comfortable with that amount of risk. And obviously, I said the target is at 10,995 to the downside. So that's what I'm looking at right now as a possibility of rejoining this downward trend. There were some other entries, but again, I'm not going to go over everything in detail right here. Jumping over to the Dow, remember, that was the leader to the upside. That was telling us, hey, we're going up, we're going up, we're going up. And there it was, trying to push to the upside. Let me go ahead and clean this one up as well. We'll start with a clean chart. And you can see we made a much higher high on the weekly chart. But again, we never got into bullish territory. Could not get the momentum indicator, RSI, above 60. And that was telling us, no, we're not done with the bear market. And if we're going to hold, we should hold in this area a little bit because we do have rally-based rally on the weekly chart. So you can see we tried to affect a bounce from that area last week. Didn't really work. We ended up closing right back down. Now we're making another run to push through all this buying pressure. And if it does, everything else is just going to collapse with it because this is the only market that was holding up the others. Going down to the daily chart, we're looking much more bearish there. Although we're having trouble getting below 40 right now. And if we can't get and close below 40, that's going to be a little bit of bullish pressure that keeps us from making fresh lows on other indexes. Another key place to look out for on the Dow, because again, this is what's been holding the markets up, is this little demand at rally-based rally, 30,905 to 30,400. Still a lot of room to get there, but that should provide a meaningful bounce for all the markets. They'll all influence each other a little bit. Moving down to the 4-hour time frame, you can see again we're dropping down pretty well. We're getting a little retracement this morning off this low, and we'll just have to see how far it's going to retrace. So far, it's pretty mild. I was going to say muted right there. It's about 23.6% retracement. That's it. So very weak retracement. Can't even break the 23.6. We had a couple tries this morning on it and it just didn't do it. I think this was actually pre-market. Then during the regular hours, we tried to rally this morning, and we actually hit some 5 and 15-minute supply zones and dropped from there. So again, there's great opportunities intraday to trade on the short side. It's just a little more challenging on the higher time frame to find a good entry. Even here, you had a little basing and drop. We didn't make it there before we started dropping down. So you got to get a little creative with your entries, go to smaller time frames to fine tune. It also reduces your risk that way as well. Case in point, go down to the 15-minute time frame here, and you can see we had this little level right here, and that started to turn down this morning, but we ended up bullish pressure pushing higher right into this, which ended up causing our collapse. And actually, this wasn't even the good area because this was from 5 in the morning. If you were to go back to the prior day, that was actually the supply zone at 10 o'clock in the morning from Friday that ended up causing the big move down. So regular trading hour zones work much better than after hours. That's what caused this big move down. We failed to stay above 60 and collapsed and are now making some fresh lows. But getting back to what we can do at this point, just look for more of those opportunities. We may not retrace back more than what we've already gotten because the markets are very weak. We are continuing to push into bearish territory, so you got to ride it down when you can. Sell the rallies, pretty much what the motto is for this week. Going into the Russell, there we are. Final equity market. I'll go to the weekly. Oops, sorry, hit the wrong button there. Go to the weekly chart. And I'll turn off my trading there for now. All right, so here we are. You can see again, lower highs, couldn't get above 60. Everything looks pretty bearish here as well. Going into the daily time frame, lower highs, lower lows, definitely bearish on this one. We don't even have any daily demand anywhere nearby. Drop into the 4-hour time frame. This is much more bearish than the other markets, and here's why. If you go back a little bit, we had that big rally on the 4-hour time frame. Let's see, there it is. This was the rally that was acting as a demand zone on what is it, about 10,995 on the NASDAQ and about 3,800, just under on the S&P. We've already broken it on the Russell. So it's already snapped. That is a much weaker market, as you can see, than the other equity markets. So if you're looking for shorts, you might actually be better either on the NASDAQ or on the Russell because they're moving down faster. Even today, we've got a fresh low going on right now. Although, here's the issue. If you're looking to short, pick your battles. Look for the right entries because right now we have a small divergence that's occurring. Prices are making fresh lows. We should be making new lows in our momentum indicator. We're not. So that's suggesting we'll get a little pullback today. I was looking initially at shorting here, and we came close to it. If we do test that area again, you got to be careful because we wiped down a lot of the selling pressure previously. If we get that high, there's a possibility of moving a little bit higher. So I think the selling opportunity is going to be a little bit lower, and that's why I was looking at smaller time frames for possible entries. Right here, we have drop-based drop on the 60-minute time frame that makes a better entry on the Russell. So right there, drop base, and there's your collapse. We even tested a little bit this morning, so it's not as powerful as I like it to be, but that's my entry, 1776.7, 1781.1. And as I was saying, I'd probably go out to bigger time frames to actually see where this trend's going to end. I don't really have a target, so you almost have to put just a trailing stop on your short and get taken out when the trend shifts. Because as of right now, we're already past these Fibonacci targets. Maybe got 1720 as the next target from the 1776 short. And I don't know what's beyond that. So like I said, just keep running with the trail stop. Anyway, that's what I've got so far. You know what? One more. I'll go into the energy markets. We'll take a look at crude oil. And remember, we've got rollover already on crude oil. Not on nat gas, but crude oil, heating oil, and gasoline have rolled to the February contract. Looking at the big picture, starting off weekly, still pretty bearish on crude oil. I don't think we have a weekly demand nearby. No, it's much lower, around 66, 67. Going to the daily time frame, again, stair-stepping down. We are trying to hold up a little bit here, so we may try to push towards this next level supply. 79.73 to 83.27. That could be possibly. Now that's a little higher. Separate zone. I was wondering if that was a retest, but it's not. It's actually a separate zone on the daily. I don't know if we're going to get that high, to be honest with you. We really shouldn't, because this is now a high that's been established on the daily chart. We should just get a small retracement before we go lower, if we're going to. The fact that we did make this higher low, both on price and the indicator, this tells me that we might go a little sideways here for a bit until we can resume our bearish trend. Going down to the 4-hour time frame on crude oil, you can see that, yeah, we can't get into bearish territory. So we're starting to gain a little bit of footing in this area, and there's no supply overhead to hold us down. We're simply correcting this impulse that we once had to the upside. That's kind of what it looks like. This was an impulse down, corrected up. And yeah, we're actually changing trend a little bit here on the 4-hour time frame. We can definitely see that. So there may be a little bit of a sideways push and a retest of 79.73 on the daily time frame before we go down again. So look for that going on this week. A little bit of a push up. That means intraday you want to be slightly bullish. There won't be huge moves. It'll be very slow going, but we might fight our way up towards 79.73 before we take another drop. Anyway, that's what I got for you so far. Again, join me tomorrow for the live event. Again, if you got questions or you want to make some comments, you want to hear some questions answered during the live session, email me or come to the live session. You can go ahead and click the subscribe and the alert buttons. That way you'll be notified when we go live and everything that's going on with the Wendell Effect. So until next time, thank you. Trade safe, trade well, and take care, everybody.